2, 1.
Hello, good afternoon, everyone. Welcome to the third of Thomas Westcott's weekly webinars. For those of you who don't know me, my name is Patrick Tigwell. I'm a general practice partner based in the Exeter and Tiverton offices of TW, and I have the honour to be the host with the most for the webinar this afternoon. As you can see on your screen, we have two esteemed colleagues with me today. We have Alison Watts. Now, Alison heads up our corporate finance department, and she has 30 years experience of helping business owners buy and sell businesses, raise finance, company valuations, that sort of thing. She's also a Gemini with a good sense of humour and likes cats.
Right, thanks for that, Patrick.
No problem. Also, we have Ian Pring. Now, Ian is, thumbs up. He's a chartered tax advisor, also with 30 years experience. And he's our newest member of our partnership team, and also a member of our COVID-19 action force. And he's based in Plymouth, but we don't hold that against him. I'd also like to mention, I don't know if you can see him on the screen, but he's definitely there behind the scenes, is Jamie Giles, who heads up our marketing department, and he's put the webinar together today. So thank you to him. He's responsible for the techie stuff. So if something does go wrong, the good news is that he's blamed and probably fired. The bad news is that he does support Arsenal. So nobody's perfect. Right, so today we're looking at a seminar length of about 35-40 minutes. We'll have the two presentations from Alison, who will be dealing with the access to finance schemes and an update on that and how it's working in practice. Ian's going to be covering everything else that the government has put out there and just giving you the updated advice as it's been changing. We'll have some Q&As afterwards. Now, during the process of registering for this webinar, we've encouraged you to submit questions, and we've got a bank of those. If you haven't yet submitted a question, there's still time. Just click on the Q&A button on your Zoom and ask the question live, and then we'll try and get to as many as we can. If you'd rather remain anonymous, just put anon afterwards, and I won't read out your name. If there's any follow-up questions at the end that we can't get to or whatever, you can still contact us at events@thomaswestcott.co.uk. So there's plenty of time, plenty of opportunities to ask questions, and we will respond to every question. Either the guys in their sort of seminar slots now, or in a couple of days afterwards, we'll certainly get back to you. So that's all from me for now. I'd like to pass over to Alison first of all for her slot on the access to finance. So Alison, over to you.
Okay, thanks. Yeah, thank you, Patrick, and thank you for that introduction, everybody, and thank you for joining us on our webinar. As Patrick said, what I'm going to cover sort of just in the next 10 minutes is a short summary of the access to finance schemes that are available. There have been a number of new announcements over the past few weeks, so it would be useful to update on that, and also to look at how it's operating in practice on the ground. We've been having discussions with our local bank contacts and also obviously working with our own clients on accessing the finance. And as Patrick said, there's a chance to put questions in as I go through, and also some questions that have come through prior to this webinar. So the first scheme launched was CBILS, which is the Coronavirus Business Interruption Loan Scheme that opened on the 23rd of March. So that's actually been operating for just over 5 weeks. This was a scheme that provides £330 billion of funds to be delivered through accredited lenders to UK businesses. So it's focused initially, it's a focus at businesses with turnover of 45 million or below, and which can show that they've been impacted by COVID-19. There are other eligibility criteria, and those are available on the British Business Bank website or through the bank's websites themselves. But the key is that the business needs to have been viable before COVID, and that's one of the points I'll come on to later on. The funding is for up to 5 million of loans, overdrafts, asset finance or debtor finance, and this can be provided on 3 to 6 year terms. It's backed by an 80% government guarantee, and the government will also pay interest and fees on behalf of the business for the first 12 months. But it's important to know that the business is still liable to pay 100% of the borrowing back to the bank. So as I said, the lending will be distributed through accredited lenders, and there's about 40 plus of those already accredited. But there were some significant changes to this scheme on the 6th of April, which are very welcomed by everybody, as it actually allowed it to become more accessible to businesses. One of the key things was they took away the requirement for personal guarantees for any lending up to 250,000. And also the banks didn't have to first offer any commercial lending, which was causing concern when it first opened. But all the applications have to go through the bank's credit risk process. So the viability test for a business is still key, and the serviceability of the loan is still a key factor when loans are being applied for. The access to this, as I say, is to go through the accredited lenders, and if you go online, there are application forms and packs to fill in there and send off. I'll come back on to what to do in that respect later on. At the same time that CBILS, sorry, don't trip off the tongue very well, do they, these names? At the same time that that was launched, the Bank of England launched the COVID Corporate Financing Facility, CCFF, and this was aimed at the UK's largest businesses and those that probably represent in total 25% of UK PLC turnover. This is, the Bank of England will be purchasing commercial paper from these businesses, and that's a way of supporting them with funding through this period. The rationale behind this was that it freed up the funding from the standard banks to be used for under the CBILS scheme and other lending. And it also was supporting businesses which are key to the supply network chain within the UK, and then in turn would support the SME market. But the eligibility for these companies are that they need to have an investment grade rating, or at least be eligible to get one. So those two schemes have been up and running, but it did leave a gap in the market for the mid-sized companies. So this week, another scheme opened, which was the Large Business Interruption Loan Scheme, known as CLBILS, I believe. This was focused on the businesses which are over 45 million turnover, but are too small or don't have an investment grade to go onto the corporate financing facility. So this is similar to CBILS I've just mentioned, but it has different lending limits. So there's 25 million of lending available per business up to a turnover of 250 million. And those businesses in excess of 250 million turnover can access a lending line of 50 million. The maximum term for these loans is 3 years, and again, they're backed by an 80% guarantee. But the government are not covering fees or interest on these loans in the first 12 months. And again, any business will be liable to pay 100% of the lending back to the bank. And the same things on no PGs up to 250,000. However, there are PGs can be asked for on all lending over 250,000, but that is limited to 20% of the lending after other assets have been taken into account. So in terms of which lenders are accredited for the larger scheme, again, that's on the British Business Bank website, and it's not quite as many as there are for the normal CBILS scheme. So these schemes are obviously operating for businesses that are viable and profitable, but there is a gap for those businesses which are high growth and the innovative companies in the UK, which because of their early stage or because they're growing quickly will not necessarily be making profits and therefore not able to access any financial support. So 2 new funding support packages were launched again this week. Firstly, the Future Fund. This will be operational next month and be delivered in partnership with the British Business Bank. This is initially 250 million of convertible government loans that are going to be made available to these innovative companies as long as they can have match funding from other third-party investors. The other criteria for this is they need to have raised at least $250,000 from private investment in the last 5 years. Secondly, R&D funding, again targeted at SMEs which are focusing on R&D and represent some of the future growth for the country going forward. This funding, 750 million, will be available through Innovate UK. So there's 200 million of a grant, loan payments, which will be accelerated to existing customers, 550 million of increased support for those existing customers, and 175,000 for new customers. More details will come out on this in due course. So that's a summary of what's in place now, just looking at how it's all working and looking primarily at the CBIL scheme, which is the one that we're using mostly with our clients. And this has now also been operating for the longest period of time. The latest stats, which come out from UK Finance, were published yesterday, and it stated that 2.8 billion has been lent so far. That's 1.5 billion up from last week, with just over 16,000 loans being provided. So the scheme is gathering momentum. It was very slow at the start, but 2.8 billion is a very small percentage of the 330 billion that's available. So there are real concerns about the speed and how onerous it is to get this money out. So having been speaking to some of the local relationship directors in the banks and asking them how it's working for them, initially, it was slow. It was a new system, a new scheme for them. They had to resource it. They had to get processes and systems in place. And they are initially, and still probably are still initially looking at existing customers. But talking to them, it seems as though things are moving on, and for a lot of them, they can get an application through and the funds drawn down within 2 weeks, and even shorter in some cases. But I think the key thing is that the application still has to pass through the bank's risk assessment and credit policy. So there's no guarantee of getting the money. So in terms of that, the banks are looking for evidence that were it not for the COVID and the pandemic, the business would be viable. And therefore, this viability test is key to businesses being able to access the finance. So as the banking system kicks in, and British Business Bank are accrediting new lenders all the time, 3 new lenders came on board recently: Co-op, Funding Circle and Starling Bank. So we should see some real traction and momentum in the access to the funds. But the stats are still showing it's too slow. But we have got some good stories, and being on the positive side from talking to our clients, some encouraging stories from loans that have been approved. And in one case, it was approved same day. In another case, the funds are in the account within 3 to 4 days of the application going in. But I think there is real concern, and you'll hear it from other business organisations, that the money needs to get out quicker and to make it easier for the banks to say yes. And I think one of the biggest concerns is those smaller SMEs who are looking for sort of sub 25k of loans. They're just not able to access the money, and it's such an onerous process to go through. But I know there's lobbying going on to the government from the CBI and lots of other organisations to make some changes to the process for the schemes, and also to make some tweaks to the scheme. So things have been suggested of increasing the guarantee from 80 to 100%, exploring government-backed extension, overdraft extension scheme, and for those smaller businesses which can't access loans is to look at grants for them. So just quickly touching on what can you do to access the funding. Our advice is firstly, approach your existing bank, go online, look at their forms, look at the questions they're asking, and the key, and check your eligibility. But the key is, I think, is to make sure you pull everything together in one go. Look at all the questions they want answered, look at what financial information they want, pull it all together and put it together into an application and submit that, so that the bank have a full picture and can start processing your application straight off. But I will leave one thought with you, that I think you need to be very careful as business owners to think about taking on additional borrowing. So check first you've accessed all the other support and taken steps to manage your cash flow internally. But as I say, hopefully there may be some changes coming in terms of making the scheme easier and an ability to get the money out quicker. But if you have if you need any help yourselves in accessing the finance or advice on managing cash flow, then please contact us at Thomas Westcott. We've got a number of experiences of clients that have been successful, and we've got a number of tools and templates to help you access that money. Okay, thank you. I'll pass over to Ian.
Well, thank you. Just before we do, thank you, Alison. I'd just like to pick up on a couple of things you said there. I know that last week when I was on this webinar, there was a question sort of, well, what's in it for startups? Because obviously they wouldn't qualify for CBILS because they've got no sort of trading history to sort of reference. And so what you're saying is there is these new schemes that the government have announced are for startups, aren't they? But just to be clear, it's only for if you're an R&D, if you're in an R&D kind of trade, or you have what was it, 200? No.
Yes, you have to have raised 250,000 of funds from private investors.
Yeah, so if you're just a sort of a normal startup and you think, well, okay, I'm going to go out and start making widgets, you can't just suddenly get your hands on this cash, can you?
No, not at the moment. I think that's why for this sub sort of 25,000 lending, or then there's a push to try and get either some grants, which, in the same way the grants have been very successful from the county councils based on rateable value, is to get some easy money out to small businesses.
Okay. You mentioned you mentioned the CBILS loans, but if you're turned down for one, so the bank computer says no, what can you do then? Because anecdotally, we've heard that banks aren't taking on new customers. Because
yes. Yeah. Well, what I would say, as the advice at the moment is still to go to your existing banker.
Right.
That, because they've got the history and the relationship. As you say, some of the people have been turned down. I think it's encouraging that more lenders are coming on board, and some of the people like Co-op and Funding Circle and Starling Bank, they'll be looking potentially for new customers. So I think it's worth approaching some of those sort of challenger banks, as they're known as, or the more fintech type banks. So as I say, I would go on to the British Business Bank website and have a look at the different lenders who are there, and you can click through quite easily and see what their criteria are, lending parameters. And I think, I also would say it could be worth going back to your existing bank, because things have changed depending on when you first asked. Those changes that were made on 6th of April, I think, have significantly allowed the banks to have a slightly easier credit policy. I think, and also it's different between the different banks. So it's definitely worth shopping around. And I think now, as the process is improving, some of the bank managers I've spoken to will potentially start to look at new to customers. So.
I did think it was funny that the stats that you mentioned earlier, they don't break them down, do they? For bank. So I guess some banks might be, we can't possibly comment, obviously, but some banks might, they might find more helpful than others.
Yes, I think I had to watch the news for that. I think there was something out about one bank this morning, but as I say, the stats aren't there.
Yeah. Just finally, before we come to Ian, what sort of, if you're a business and you're sort of wary about taking on more finance, what sort of other things could they do, just very, very briefly, to protect their cash?
Well, I think it's the very basic things are, look at all your costs, what you need, what you can cut back on. Obviously, don't do any non-essential spending. I would say that it was best to produce a small cash flow, so you know what your ins and outs are, so you know what you want to try and manage first, see where the pinch points are, and make sure you've accessed all the other support that's available. And there's a good tool now on the government website, which is a support tool where you can just put in a few minor information about yourself, your business, and it then lists all the access to support that you need. And also, if people owe you money, chase that money. Don't let them get away with not paying you, and talk to suppliers and landlords about time to pay, etc.
All right, that's very helpful. Thank you.
Okay, thanks.
Right, Ian, tell us about everything else.
Everything else in 5 to 10 minutes.
In 10 minutes, yeah.
Well, start the watch. Okay. First thing I should say is on our website, we've got a number of help sheets. So hopefully everything I cover will be on those help sheets. Similarly, I think Alison just alluded to it. Last Monday, there's an online tool that's been put on the gov.uk website that's sort of entitled, I think it's Find Coronavirus Financial Support for Your Business. And that's just a short questionnaire asking about your business, so number of employees, turnover, etc. And it will list for you all the financial support to which your business could potentially be eligible. So it will list, hopefully, some or all of what I'm going through now. So the first business support, and the most widely publicised and the most used to date, is clearly the Employers' Job Retention Scheme. That was originally announced on the 20th of March, and we've had guidance constantly updated, and the latest guidance update was on the 20th of April. So important you keep an eye on this guidance because it is constantly changing. It was a temporary scheme to the end of May. That's now being extended till the end of June. And also the eligibility date for employees has changed from the 28th of February to the 19th of March. Trouble is that's only likely to help weekly paid employees sort of taken on after 28th of February, but actually they have to be paid through the payroll on or before 19th of March. The guidance still not clear in terms of overtime for reference pay purposes. The previous version of the guidance stated that past overtime can be included, but the latest version has been changed to use the phrase non-discretionary overtime. So still probably a little bit of clarification needed there. One of the advanced questions for this webinar was, can their employees go into a now closed shop to do a little bit of tidying and spring cleaning? And the current answer to that is no. Now, whether that's relaxed as we transition off lockdown back into work, we'll have to see. Currently, employees on furlough cannot undertake any services or generate any revenue for the business. So they can't do any work. And if they do, you won't be eligible for the Job Retention Scheme grant for that employee. Now, the good news on Job Retention Scheme is that the HMRC portal, which you use to reclaim the grant, that's been up and running since Monday the 20th. Seems easy to use, albeit it can be a bit time consuming if you've got less than 100 employees because you've got to manually input every employee's details. And that's probably why in the press today they're saying they haven't as many claims as they're expecting. It's taking time for accountants and payroll bureaus to process these claims. The payment should be made within 6 working days. So if you were looking to receive payment for the 30th of April, you should have claimed online by Wednesday, the 22nd, to receive payment for this month. Sick pay, again, latest guidance 21st of April on that. Well, the SSP rebate scheme is going to repay employers for the first 2 weeks of SSP. But note now that if you've got an employee on SSP or who's because they're sick or self-isolating, the Job Retention Scheme rules have been changed to allow people to be taken off sickness and put onto furlough rather than having to wait to end being sick, if you like, to go onto furlough. So you can move them onto furlough, which might be better for their pay, obviously. The VAT should know that any VAT payments due between 20th of March and the 30th of June can be deferred to assist your cash flow, which is Alison's talking about. The VAT will have to be paid on or before 31st of March next year, but there won't be any interest charge. I think it's important to note you'll have to continue to submit VAT returns on time. And obviously, if you've got a direct debit set up with HMRC, you must cancel it. We're still finding that some clients haven't done this. And if it's set up, your money will automatically go to HMRC. Self-assessment payments on accounts that were due at the end of 31st of July, they're going to be deferred for everyone. It was originally just for the self-employed, but they're deferred until 31st of January and no interest will be charged. No application needed, it will just be deferred. For everything else, for all the other tax payments, be that corporation tax, PAYE, construction industry scheme, if the business is struggling to pay those liabilities, remember to use HMRC's time to pay service and request deferral of the payments. It seems to have worked well. HMRC in the main have been sympathetic and they've allowed deferral and or payment by instalments. And then probably the big one coming up, the one we'll probably get more questions starting to flow in now, is the self-employed income support scheme. This was first announced on the 26th of March to be effective from the 1st of March. And again, the most recent guidance on this is on the 21st of April on the Gov's UK site. So have a look at that. It's going to be based on submitted tax returns and HMRC will determine the eligibility. So it's not for you to say, I'm due it. It's for HMRC to have a look at your submitted tax returns. And it will be a grant of up to $2,500 per month. And HMRC will be writing to the eligible individuals in mid-May, inviting them to apply online for the grant payments, which are expected to be paid out in early June. Now, if some self-employed people don't have online access, they are saying there will be a workaround where you can manually claim, or sort of non-digitally claim, I suppose. HMRC recently announced that any amendments made to submitted 2018-19 tax returns after 26th of March are going to be ignored for the purposes of calculating the grant entitlement, because there was a fear that people would adjust their profits to manipulate the amount of the grants. And any unsubmitted 2018-19 tax returns, and you need to have submitted a 2018-19 tax return to be eligible, they needed to have been submitted to HMRC by yesterday. So if you haven't done it, it's too late. The difference to the job retention scheme is that you don't have to stop working if you're self-employed. You can carry on working if you're able to do so, and you will still be eligible and receive the grant monies. Business rates relief, well, we've got 100% business rates relief being given to businesses in retail, hospitality and the leisure sectors, as well as children's nurseries, and that the council should automatically apply that discount to the 2021 council tax bills and reissuing them where they're already issued. And finally, we've got business support grants. So grants of between £10,000 and £25,000 are being given per unit to small businesses and those within retail, hospitality and leisure. And it depends on rateable value. So as long as the rateable value of the unit is less than 51,000, you should be getting a grant if you're in the appropriate sector. Again, local councils should have already contacted you if they've determined you're eligible. And I think approximately 50% of the grant claims have already paid out. I know Plymouth was very quick paying out the grants. South Hants was slower, but have definitely caught up in the last day or two. Note that version 5 of the grant guidance actually came out earlier today, and it has confirmed that these business grants are taxable. We assumed that they would be, but it's now in black and white. It's taxable income for the business, the 10 or 25k grant or whatever total amount received. And I think that's my canter through. So happy to deal with any questions.
Yeah, thank you, Ian. We have actually had a question in. Can you defer employment allowance so that you can claim for furloughed employees in earlier months?
I think the answer to that is no. It should be sort of first in, first out. That's the guidance isn't explicit, but it suggests that you should be setting off employment allowance where it's available. And I think that would be perfectly appropriate.
Okay.
To do so.
You also mentioned, just to sort of come back to you on the self-employed income support scheme, We've had a few questions, and I've been asked this as well. What does the taxpayer need to do to, to access those monies? Because nothing seems to have happened. But from what you've said, HMRC will come back to them in mid-May. Is that right?
That's right. The latest, hopefully, they're working on it as fast as they can. They've had, obviously, job retention's taken the priority. So whether it's any quicker than mid-May, the latest 21st of April guidance says mid-May. They will write to you, a bit like the business rates grants, and invite you to make a claim with a reference online portal and with details of the bank account. They'll be using their software to review the 2016-17 through to 2018-19 tax returns, working out average profits, working about eligibility in terms of are your profits over 50,000, etc. So no, nothing to do. Obviously, if you haven't heard anything by the end of May, and we know that eligible businesses have been contacted, then obviously it's at that point we need to understand why you've received no claim if we think you're eligible.
Yeah. Switching now to the, most of the questions seem to relate, as always, to the job retention scheme. This is a common theme as well, that you furloughed your employees. If you can bring them back, obviously, but is there a minimum time you have to keep them back before they're re-furloughed?
No, the minimum is the furlough time. The furlough must be for 3 consecutive weeks,
yep.
But you can bring them back for as little as a day and then re-furlough them. So it's every time they must be furloughed. For that period of furlough to be eligible under the job retention scheme, the equivalent wage, it must be 3 consecutive weeks. We had a client only earlier this week, someone who had furloughed their plumber, or a plumber, who had got called back to a job. He was on furlough. They sent him back to finish off a job. Unfortunately, that has stymied that grant claim, and so he has to restart his 3 consecutive weeks as of the following day. So no, you've got to be off work for 3 consecutive weeks.
Yeah, and a couple of queries on the when you can claim. We've had a question in an organisation furloughing employees from the 1st of May. So would they be able to claim for that? Well,
I suppose the perfect answer is always it depends, certainly in tax. And obviously it depends if it's a monthly paid or a weekly wage that's being paid. But assuming it's a monthly salary, at the point they run at or around the point they run the payroll at the end of May, they can submit the grant claim. And obviously if they want to be paid on the last day in May, they'll have to ensure that they run the numbers and put the portal claim in at least 6 working days prior to payday for the purpose of having that money in their bank account.
Yeah, so we've had another query actually similar to this. Chap says they're furloughing 4 employees on the 1st of May. They're paid monthly. Can he claim on the 22nd of May for the full month's salary? I suppose it depends when the actual pay date is, does it? Or
it will depend on the guidance. Simply says you can submit the claim just in anticipation of at the same time or following the payroll, the RTI payroll.
Yeah.
So, but clearly, if you look by the step-for-step guidance, it's the HMRC issued publication that shows you how to work through the calculations. It says, look, given, if you want it for the last payday, you'll need to claim online 6 days before. So it will allow you to claim in advance of the payday, to have the funds in your bank account to fund the job retention scheme, to fund the furlough wages. Originally, when the scheme came out, the wording was reimbursement, and therefore we had assumed that you would have to pay out the monies and then claim back the grant subsequently. Now it's all subtly changed to allow you to actually get the money in the bank account to then immediately pay out to the employees.
And this 6 days you mentioned, we've had a query, is that 6 business days or does
6 working days?
6 working days, yeah.
Yeah.
Okay, that's fine. We've had a question earlier on registration about just switching to the furlough process and what happens if you furlough your employees, but then subsequently the business fails. Are you, as the employer, liable to repay that the furlough amounts you've received?
Not that we're aware of. It's certainly not in the guidance or the legislation. Job retention scheme is there with the intention to try and avoid staff being laid off or made redundant. But the reality is of this pandemic, the longer that it carries on, the more likely that some businesses won't come out the other side. And as try they might, unfortunately, people will have to be made redundant. But the answer is no, not as far as I'm aware. There'll be no reclaim of the job retention scheme grant by HMRC.
Yeah. And Alison, just one for you. We've had another question about specifically charities. Now, was there, I'm aware obviously that the Chancellor issued guidance, I think on the 8th of April, about this £750 million sort of package for charities. Can you tell us more about that, or how they can claim it? Or
well, in terms of the 750 million, yes, I think 360 million of that is going to be provided directly by the government to large charities and sort of the frontline charities. So I think that's going to come out from them directly. There's another 370 million going through the National Lottery, which then you can apply to. But again, I think that's targeted at what I would say frontline type charities. Yeah. But there is another, for the sort of the smaller charities, I know that there's the other element of the 750 is there's a minimum of 20 million, which is going to the National Emergencies Trust. And this in turn has then been allocated down to the community foundations across the UK. So there's a pot available within the community foundations in your area. So we know that for Devon Community Foundation, Somerset Community Foundation, they will have pots of money which they can give out to smaller charities. And so we understand, and we've had experience, that the application processes are quite straightforward. And we've heard that the charities, some charities have already received some cash.
Oh, good, yeah.
I think that particular question that came through, I think it would be worth them contacting their community foundation. I also have seen that there are a number of other sort of websites, which might be worth looking at. So there's the smallcharities.org website and the charitybank.org website. And on there, I saw that they had a list of other sort of funding available. So it might be worth looking through those to see if anything's attributable to there.
Okay.
But obviously you can access, the other support schemes from the government as a charity. But in terms of direct sort of grant funding, other than sort of rates and things, I think they should go to the community foundation.
Yeah, but they can still obviously access the JRS and
yes, and do all of those others
and the business grants and this sort of stuff. Yeah,
yeah.
Just another question about furloughing just come in. If you were a small business, furloughed its 2 staff, can that business still market for future clients? So I would say not, but again, what do you think?
Well, the furloughed staff, I mean, obviously, if the business consists of just those 2 furloughed employees, they themselves can't personally generate revenue for the business, market, undertake services. Now, clearly, you can still promote the business in terms of there can still be a website offering, but whether providing services is updating and maintaining that probably is working. So if it's just can the business still be seen to be open for business and trying to win new work via a website or a third party? Not a problem, but those employees can't be involved in that activity in any way.
Yeah. So this is where you've got maybe a husband and wife team, and you would come across issues if you furlough both of you to actually kind of make sure the business can carry on.
Yeah, we've got lots of sort of small companies with company directors effectively running the business, where you furlough one and the other one carries on. Someone has to carrying on the business if it is still, open for business.
Yeah. Just one final thing, and I'll just wrap up. We've had a couple of queries about the business grants, the rates grants. Sorry. Now, and you've confirmed that they're taxable. What period would they be taxable in? I mean, in my view, it's when the period in which they're received. But is there any kind of other alternative guidance to say, well, actually, it should be accounted for in your accounts at some point?
No, I mean, I suppose it's normal. The answer is usual normal accountancy principles will apply, because the guidance, which only came out today, was the first time it's been confirmed as taxable. We assumed it would be, but they've only today say that it's specifically stated to be taxable. So, usually it would be for the period it is receivable, but I'm a tax man, not an accountant. So I'll avoid that one.
Okay. Well, I think that brings us to a conclusion for today. I would like to thank everybody for watching this, for contributing. I'd like to thank Ian and Alison and Jamie for their efforts. What I would say is that I'd reiterate that if you have any further questions, they will, please send those to us at, I'll give the email address again, events@thomaswestcott, or one word, .co.uk, and then we can sort of collate them and follow up on them. If you're a client and you've asked a question and you don't feel it's been answered, please get in touch with them. And finally, this is a series of webinars, and we're looking at the moment to do one at the same time. I think it's the same time next week, so do look out for that. So thank you again for watching, and it's goodbye from us, isn't it, team?
Yeah, bye.
Thank you. Cheers.
Cheers, guys.
Cheers, bye.
Cheers. Bye.